Everyone, welcome to the Timing Research Show for June 13th, 2016. Today we will be talking about the 142nd weekly report from Timing Research. If you haven't had a chance to see this yet, just go to TimingResearch.com and you can click on the reports link and see this or any past report there. My name is David Kosmeter. I'm the creator of Timing Research, and today I have Dave Landry back, the host. So I'm going to go ahead and turn it over to him.
Thank you, David. Appreciate you having me back once again. I recognize 2 out of the 4 of the names, so it looks like we have 2 new people, either to the show or at least to me hosting the show. Cameron, let's go over to you first. To those of us who don't know you, tell us a little bit about your trading and a little bit about TradingWorks.info. Is that a new website?
Well, yeah, it's not really a website. I tell you, David. Hey, good to see you again. By the way.
Good to see you too, man.
And it's nice to be with you. Right now, I'm just a retail trader. I'm trading options, and I had my TradingWorks.info from a previous company. I still use it. I do. I hate to use the word mentor, but I assist other people who are trying to get into option trading. Try to point them in the right direction. Give them some of the tips that I've been using. But other than that, I'm just a retail trader these days, and I'm enjoying it.
Good for you. All right, Kristen, you're up next. Kristen Fromhertz of TradingWorks.com. Kristen, tell us a little bit about yourself and a little bit about your trading.
Sure, absolutely, and great pronunciation on the last name for first try.
So well, thank you.
Thank you, and good afternoon, everybody. Yeah, sure. I started my career on Wall Street. I was a senior ETF trader at Bank of America Merrill Lynch. I was a director over there, and I made risk markets for institutional traders, and all the ETFs that I'm sure you guys trade: domestic ETFs, international ETFs, commodity ETFs. So a little bit of everything there. I started my career at Merrill Lynch. I was a Delta One trader. For those of you who don't know what Delta One trading is, it's those traders. It's probably their busiest week of the year. It is an expiration week. So a Delta One trader works on a lot of option trading, a lot of futures trading, and a lot of index rebalancing, so index trading, ETF trading, and so on and so forth. So that's just my history on Wall Street. About 3 months ago, I started up a trading room for retail investors, so kind of bringing retail traders to the institutional world, showing them how a trading desk functions. That's how our trading room functions. So we write newsletters as well, but predominantly I manage a trading room, all-day trading room.
Cool. So you guys are playing the gamut that last week of trading. I guess now with weekly options, that changes the playing field a little bit.
A little bit. It's definitely a little bit different than it was. Makes things a little bit more complicated, but fun as well.
Cool. Well, the next guy up I recognize, Ed Carlson. He's in the American Association of Professional Technical Analysts, fellow member. Welcome back, Ed. Good to have you back. Ed's with Seattle Technical Advisors. Easy for me to say. Tell us a little bit about yourself, to those of us who don't know you, Ed, and tell us a little bit about Seattle Technical Advisors.
Hi, Dave. Good to be back with you again. Always enjoy these get-togethers. A member of AAPTA. God, I thought they kicked me out a long time ago. It's good to know I'm still in the inner circle.
Yeah, I check back often too. I'm nervous about a club that'll have me.
Okay, Groucho. I run a website called SeattleTechnicalAdvisors.com, and the niche of the website is the work of George Lindsay, which for many of you listening, you've probably never heard that name, but Lindsay was a guru back in the 1950s, 60s, and 70s, and he's responsible for the model some of you may have heard of, 3 peaks in a domed house. And so that, combined with more traditional technical methods, cycles, big on cycles, we're publishing 5 days a week at the website, and would invite anybody that has any interest whatsoever to swing by and take what we call a sneak peek or trial subscription.
Cool. Okay, Larry, you're up next. Larry is a new name to me, at least. Larry Gaines of PowerCycleTrading.com. I don't know what's wrong. My tongue is stuck to my mouth today. Larry, tell us a little about your trading and tell us a little bit about PowerCycleTrading.com.
Yeah, thanks, Ed. Thanks for having me here today. Yeah, so I started out my career trading cargoes of oil back in the 80s, and for a number of years, over 10 years, ran a large international trading group that just was focused a lot in oil, but then we branched out in all the other derivatives and everything and started trading options on oil. That's where I got my start with options back in the 80s, and just been, passionate about options ever since. So started my own site back in about 2010 called Power Cycle Trading, and what we do is we focus on using cycles and momentum for price direction, and then try to trade as much as we can using options, to execute those trades. So that's what I'm doing, and check me out at PowerCycleTrading.com if you'd like to follow. We have a virtual trading room and do all kinds of good stuff, and do a lot of seasonality type of work as well. So that's a little bit brief background on myself. Thank you.
Cool. Okay, Cameron, you've been around for a while, so let me just. Oh, by the way, two things. First, I'm going to ask to those of you who are new to the show, and then we do have a new feature with the show. First, I'm going to ask if you think the market is going to head higher or lower this week, and then what percentage you think that's correct. And then the second question is as to why you believe that move will or not occur, or whatever you said. And then obviously we have the question of the week. But the new feature, just so you guys can think about it, is you have a trading idea, an actionable trading idea for today. And David, I forget the exact name for that new feature. I know you sent me an email somewhere. I'll check that.
Yeah, just a free, any kind of trade recommendation or trade suggestion or idea that you want to share with the audience. It was a thing that Matt Buckley started doing just on a whim when he was hosting, and so I'm going to add it as a official feature of the show from now on.
Okay, so start thinking about that free trading idea, and then also to those of you who are new to the show, it seems like our viewers like us to use charts. So if you want to pull up a chart at some point in time, feel free to do so, especially when we get to the whys. All right, without any more further ado, Cameron Yost, back to you. Based on any technical fundamental indicators you want to use, would you predict that the S&P index will move higher or lower by Friday's close, from Monday's open to Friday's close? Obviously, we know they're open. And based on your prediction of up or down, what percentage do you think you have accurately, let me read the question to make sure I say it right. Rate your confidence in your answer to the question by estimating the probability you have correctly predicted the move.
Well, I'm predicting the market will close higher come Friday afternoon than it opened this morning, and I have a 70% confidence ratio in that, or a 70% certainty ratio, whatever you want to call that. Do we do the why now, or do we do that later?
We'll get to the why in the next question.
Okay.
All right, Christian, same question to you, up or down, and rate your confidence in the answer by estimating that you have the probability that you have correctly predicted this market move.
Sure, I'm going to say lower, and I'm going to say by 60%. So not a huge amount of conviction to the low side, but I think the market's due for a breather, and I'll get more into the details on the next question.
Okay, cool. All right, Larry, you're up next. Same question.
Yeah, so I'm going to say higher as well, and I'll go through my reasons, I guess, on the next go-around.
Okay. And percent correct?
Let's put it at 70 as well.
70 as well. Okay, Ed, let's go to you.
Yeah, I'm looking for higher by the end of the week. I actually published an article this morning at TraderPlanet.com saying don't get sucked into the bull trap here, that it will top out by the end of the week, but it'll be higher, I think, 70%.
Okay. So it's a bull trap, but you think it's still going higher?
Well, by the end of the week.
Oh, okay, I got you. All right, well, maybe you could elaborate when we get to the next part on this. Cameron, you want to pull a chart up, or you want to just talk a little about it?
Yeah, I didn't get any of that put together here for David. Next time, I promise I'll have a lot of that put together, and I also have to understand this Google Plus technology. But no, I think it's interesting. There are 3 of the 4 of us that are guests here are suggesting that it might go higher with some degree of kind of a weak degree of certainty. But I saw in the crowd forecast that David does, we only had about a 36% response that the market was going to go higher, and that's over the hundreds of people, I guess, that fill this thing out. So there's definitely a feeling out there from the universe that this market's going down. But it's been that way for weeks now, and so far the bears haven't been right. I mean, I think everybody's waiting for this, and this market just keeps wanting to go up. And it's interesting with the group that's on here. So I'm very interested to see what everybody's got going. But I'm sorry, David, I kind of jumped in here. What's the next question?
No, you were up. That was a question. We wanted to know up or down, and then the percent correct. And then I forgot to introduce myself, which is really unusual for me, given that one of my favorite topics is me. Obviously, I'm Dave Landry of TradingWorks.info. I believe you can only predict the short term when it comes to markets, but you could follow forever. And I have a hybrid approach to money and position management. I do have a lengthy article actually up today on money and position management on the website, which will explain a lot of that in a lot of details. If you could make it through, borrowing a line from my friend Greg Morris, just don't operate any heavy machinery afterwards. But the money management is crucial, and I think it's something that's very necessary. And I think if you're going to become a successful trader, you need to focus just as hard on money management as you do the methodology and obviously psychology too. So I believe in the psychology, methodology, and the money management all wrapped together. I have a 21-page report of the methodology in and of itself, and have plenty of articles on psychology and money management on my website. So check those out. First chance. As far as up or down, it's a crapshoot trying to predict the short term when there is no discernible pattern. I just said you could only predict the short term, but some of my clients misconstrue that as that you could always predict the short term. If you could always predict the short term, then I certainly wouldn't be here. I'd just be sitting on my boat relaxing all the time. But you could, I think, based on the fact that there's no real patterns in the market other than sideways, I'm going to err on the side of being a little bit overly cautious, and I'm going to predict down, but I'm only going to give myself about a 55% correct on that. Let's go back to you, Cameron, and what developing events? Oh, I already asked you this, did I? What developing events, or did I?
No,
what
you
developing
didn't.
events? Okay, good, thank you.
That's the next question.
Today. Yeah. All right, next question. What developing events or your reasonings do you think that the S&P 500 will move higher by the end of the week?
Well, I'm a couple of things. I think on Friday we saw the was it 20-day on the SPX, a 20-day and the 50-day, where the market kind of bumped into that, and so I think that we're going to see a bounce back up today or during the week. I think today, tomorrow, it may be a little weakness, but maybe not. But I think with the Fed coming on Wednesday, and I think there's almost a certainty now we're not going to see an interest rate for certainty in June, and almost certainly not in July. I think that's going to be good for the market. It seems to like that. And most importantly, we've got triple witching this Friday on expiration Friday, and I think that historically the markets tend to trend up during this week. So I'm looking at that. Now on the downside, which could, I don't know how the market's going to react to the Britain withdrawal from the EU. Now they vote next week, but I think that might be played into it already. I mean, there's the people who want to withdraw, the exit the EU. I think 17% is what I saw earlier today. That's what the polls are showing, that the exit vote is going to be, the exit people are going to win by 17% margin at this point. So, no, 19 points is what I got written down here. So, I mean, if it's that certain that Britain's going to come out of the EU, I think the market's played that in. I don't think that's going to be a surprise, but it might be. So back, I think with the FOMC on Wednesday and with expiration this week, I just think we're going to keep moving up.
Okay, I get most of my news through osmosis, so thank you for filling me in on all these things. But I do. One reason I ignore the news is because I always feel like everything's already baked into the cake, or usually baked into the cake. And a lot of times you get the opposite direction, the reaction as it should. So interesting stuff there. Let's go to you, Christian, next. Same question. What specific reasons do you think the S&P will be headed higher or lower this week?
Sure, let me see if I can take the screen. I'm just going to try to do that. If you could just give me a quick acknowledge that you could see my screen.
I see it.
Good. Okay, cool. Okay, so mainly, I guess a combination of reasons, but mainly technical. The S&P futures, I very much will look at value areas to tell us, where we're going for support and resistance. And if you look at a weekly chart here in S&P futures, this red line is the top of value. And we made a nice move, and just as Cameron said, which I agree, the trend has been your friend the last couple of weeks. Everybody's been pretty bearish, but yet we've seen a steady grind higher. It's the first time that we really had some noticeable resistance. That's right at that 21.7 level that we tagged last week. We got to about 21.18, 21.19, which sometimes you can do with these value areas for resistance. But you can see it's a firm rejection of the top of value. And you take a look at this candle as well, and it kind of looks like a shooting star candle. So while I do think the chance of us going higher in the longer term is pretty good, I think we were due for a little bit of price digestion. Another thing that I look at is small caps. I often feel that small caps lead the move a bit, which we've seen a humongous rally in small caps. They've led large caps from the beginning of the rally that we had in mid-February, but they're starting to pull back a little bit, and they also got also a pretty ugly looking candle on the weekly chart. Pretty much a longer tail on that chart. But we also got a little bit overbought. We didn't get there in terms of S&P and large caps, but small caps. If you look at the RSI, which I do quite a bit. Once the indices get to overbought levels, they generally don't stay there for too long. And you can see we got to a 70 RSI, and we backed off from there. That was in the middle of last week, and since then, small caps have been underperforming. So I think that's something to keep an eye on. As long as they continue to underperform, I think S&P follows there. Once that flips around, I think we may resume that uptrend. A couple other things that I'm watching is volume. Volume's been very light in the uptrend, which it normally is. Once you're in an uptrend, volume becomes kind of subdued. But we are seeing a little bit of a pickup in volume here, and normally you see a pickup of volume on turns. So I'm looking at we could fall back a little bit further, I think, this week. I don't think it's going to be a huge amount of movement down, but I think we were due for a little bit of price digestion after a huge move from February. Another thing is, if I would say the VIX was under 15, under 16. That gives me a little bit more confidence saying, hey, it's just a 1 or 2 day pullback. But, the VIX has moved up to 19.5 and is almost at, that's a huge move from 14 where we were just a couple days ago. It tells me that this Brexit vote that's coming up, we've got a lot of macro events that are coming up in the next week. You got FOMC, which, very unlikely that they do anything, but you also have the Bank of Japan. You got quadruple witching this week, and you have a big Brexit vote. So I think that's enough to sustain us going down for this week. So I'll stop there. The last technical indicator thing I'll note is the last couple of weeks, the equity put call ratio has been very low. There's been a lot more call buying. That's changed in the last 2 days, so something certainly to keep an eye on there.
Hey,
I can go into further reasons if you like, or.
Hey, Dave, we can't hear you.
Nothing, Dave. Nope. Nope. That's not good. Well, I think everybody knows the questions. Who is next? Is it Larry?
I'll go ahead and go next. Can you see my charts here?
Yeah.
Yeah, okay. So anyway, a lot of mixed kind of signals though, as usual with these markets, but a couple things to point out. First off, if you look at, we came up here to that 2120 level, pulls back, and we had a pretty nice pullback the last 3 days into this 382 retracement. So I like to look at Fibonacci levels, and so this is a good support level. Now, if we can hold here, this area about 2080, we'll call it 2085. This is on the SPX. So you can see the price action down here, 2085. So if we can hold this 382, then that gives me a better probability to push back up. Now, the reason I thought we would potentially push higher towards the end of the week is, one, if we can hold this level here today and tomorrow going into the FOMC. And again, I agree that there's probably nothing that they're going to do. The market knows that. We do have the Brexit vote next week, and if they do pull out, I have no idea what that will do. I would think that probably the market will push lower. Now, the reason I'm thinking that we could push higher here is, one, if we can hold this level here, but the other big factor to me is when you look at option open interest, and if you just on a monthly expiration, it's a really good key ingredient to where the markets can be. So if we look at the SPX, the open interest within the expected move here for this week, you can see the big accumulation is at the 2100, so you've got about over 88,000 calls and 77,000 puts, so pretty balanced there. So that could be a battleground. And then if you look at the SPY, it equates to the same. Basically, you'll look at the 210 strike, which equates to that 211, and you'll see the same, accumulation of high open interest for the monthly expiration. So when I see that, I kind of tend to, look at a gravitation back to those kind of levels, and that's really the only reason, or the main reason, that I think that could push back higher than where we are currently.
Okay, can you guys hear me now?
Yeah.
Yeah, sounds good.
Yeah, I was just saying, and that concludes the secret of trading. So, who was that? That was Larry. That was just up, correct? So, Ed, we're back. I think we're back to you again.
Are we at me? Why don't you repeat that question for everybody?
All right. The question was the answer to the prediction. In your case, was up. What specific reasons do you think the S&P will be headed higher this week?
Oh, right. Well, got a couple reasons. Number one, my hybrid Lindsay model is pointing to a low today. I call it the hybrid Lindsay model because I took one of Lindsay's favorite, actually his absolute favorite model that counts from the middle section, and I applied it to time frames that are a lot shorter than he ever had any interest in. And that's pointing to a likely low today. And on top of that, I had some cycle work from the VIX and some other things that point to a high on Friday. And so that's where I came up with the idea that this is probably a bull trap. We'll get a little rally this week and suck a few people in for the longer term when I'm pretty confident that we're going to be lower than we are now by sometime in this month or next.
Yeah, that's and that's why I was interested earlier when you called it a bull trap, even though you said higher, because I don't trust it, at least not yet. Mm-hmm. And the reasoning I'm going with lower is I'm just going to I'm just going to err on the side of being a little bit overly cautious. And if you could see my chart, last summer we had a bow tie down, and so far it really hasn't materialized to the downside. A bow tie is just simply when three moving averages come together and cross over, begin to spread out, especially after an all-time high like we have here. And if those of you who know me, if you could bear with me for just 1 second, I know I've showed this chart quite often, but we obviously had one in 2000, we had one to the upside in the 2000, 2003 bottom, and then we had one on the downside in 2007 on a weekly basis, or very, very early 2008. You can see it just began to turn right as the year began. And we had these huge moves out, and then we also had one that was a little bit late, but it was in 2009. The market still went up a couple 100% from then. So I mentioned Greg Morris earlier. One of the things that he said, or says, I should say, is that back when he was running $6 billion or so, He says they treat all signals as if it will become the big one. They take all signals seriously. So in this particular case, this sell signal remains in effect until the old highs are taken out. And I kind of agree with Ed, wondering if there's something bigger going on that we might not be aware of. This is, by the way, this is the minor signal here in case you're seeing the cross here. Major signals come off of major highs, so this signal is still in effect until we make new highs. Now, speaking of new highs, a lot of people are getting kind of bullish out there, which sort of surprises me, because if this market is so great, then why can't it just get to new highs and stay there? And it's just kind of been creeping higher as of late, and then we had this little bit of a sell-off, which we're getting a little bit more of today. And one thing I like to look at is a net-net basis. So if we just draw a line going back in time, you can see we haven't made a whole lot of forward progress since the middle of April. And then as this drops further, obviously you give up more and more forward progress. Now, a couple of more things, a couple more points I should say. You can go all the way back to 2014. And what's interesting, when you get to the Russell, and I'm a big fan of keeping an eye on the small caps too. And obviously shorter term, they're pulling back in here a little bit, not necessarily the end of the world, but they have a mountain of overhead supply. And if you back the chart way out, you can see that on a net-net basis, this index hasn't gone anywhere in over 2 years. So my feeling is that if you're in a bull market, you're going to have some consolidations along the way. And as someone said earlier, I think Christian said earlier, some time to digest the gains. But the fact that we've gone several years here without making a whole lot of forward progress, that has me concerned. So I'm going to err on the side of being a little overly cautious. It doesn't mean that I'm necessarily rushing out and shorting a bunch of stocks, although we did short a bunch earlier this year. But what we're doing instead is we're just being very selective and picking our spots carefully. And then when we get to the trade idea, I'll elaborate a little bit more on that. Cameron, let's go back to you for the question of the week. Yeah,
Dave,
go ahead.
can I jump in?
Sure.
I wouldn't do this if I didn't think it was important.
No, please.
You know, the way you present that, you sound like you're a little insecure, and you're thinking as if you don't have a whole lot to base it on. Then you went ahead and made the case for it. I wasn't expecting that. But there's more than that. I mean, number one, if a person was looking at my Lindsay work, and you don't have to look too hard, Lindsay often wrote about how there's an important low in the markets 13 to 14 months after the high of what we call the basic advance. Well, that high of the basic advance was just when you would guess it would be May 19th, 2015 is when the Dow topped out. So we're looking for some kind of significant low this June or July. Oh, well, this month. We're there already, aren't we? June or July. And that also matches up with a lot of his other models looking for a low in here. But you don't even have to get that complicated. Sell in May and go away. I mean, how simple is that, right? We all know that the markets tend to have a rough time between May and October. Presidential election years. Now here it gets a little convoluted. A typical presidential election year, you see a high in April and a low in May, and then a rally for the rest of the year. However, in the 8th year of a presidential term, we tend to see that high in April, the low in May or May, and then a rally into June, and then it goes down for the rest of the year. The problem, of course, with that is our sample size isn't real big, 8th year of presidential terms, but you know we play the hand we're dealt. And then finally, if you look at 6 years ending in 6, you tend to see an April high followed by a late May low, and then stocks frankly, they just struggle for the rest of the year, or at least until an October low, which is then followed by that typical end of the year rally. So I think there's a lot going on right now that says that we should be looking for lower lows than what we've seen last week, certainly.
Oh, cool. Yeah, I'm not a big fan of the Wall Street adages. Tom McClellan, though, he did some interesting research on the sell in May and go away, and it's actually more accurately June. But he said things that rhyme tend to be believed more. Like if the glove doesn't fit, you must have quit. So I thought that was kind of interesting. And you know, Tom, he actually has statistics on things that are more believable if they rhyme. But anyway, I thought that was kind of
Wayne Whaley did a very involved study on this. I think he got an award from the MTA for it on his sell in May and go away strategy. He went back and documented it for pretty much the entire 20th century. I don't remember the exact date, but I want to say May 5th is the date he came up with.
Okay, cool.
Just for the record, you know.
No, that's good. That's good. Well, the problem with the seasonality pattern is I think your sample size is too small, and if you try to trade, you know, I would be very cautious trading something like that. And the reason I would be cautious personally is because of my style of trading, because if I miss a few big trades and those trades happen to come along in the middle of summer, and I hate summer. I hate that summer's here, really do, especially when it comes to trading, or that for that reason in particular. But you have to be here, as I often say, as a trade follower, you must be present to win. So if we catch a big trade in June, July, or August, if we're not around to trade it, then there goes our year. So that's one of the problems. But the other problem, as far as the normal distribution, is that it could be wrong for a few years, and then the edge would still be there. And so it's just for me, it's a way. I can't see it as a good way to trade. But yeah, there is some summers are a pain in the ass, to put it mildly, especially for a trading guy. Cameron, let's go to you. What do you think? I'm sorry. Yeah, let's go to question of the week. Question of the week is, what do you think are the main reasons why most traders are not successfully consistent, and what could the average trader do to improve consistency?
Well, I think you mentioned earlier money management, and I tend to agree with that. I think, you know, you get a style down, you get you find your groove as to what you like to trade, how to trade it, but if you can't manage that money, your position sizing, you know, following the discipline of setting targets and getting out, whether it be at a loss or a profit. I mean, and for most of the retail people that I talk to and am, that's the toughest thing to do. You know, you always have this, it's going to come back, you know, and you can't do that. You just got to set rules and you just got to follow them. That's what was the question? Sorry.
No, you answered it very well. In fact, you stole a lot of things that I'm going to use, but I went ahead and made notes so I don't forget to say them. No, good answer. Don't worry about that.
Hey, I made a note too here. I got to go back to what Larry was saying here.
All right, go ahead.
That open interest, I think that's huge, and you had seen that, looked at it also. We got a tremendous amount of interest there at 2100, and on both the put side and call side, and the markets tend to migrate up there. I think we had that on the weeklies last week too. A very about the same type of picture, and came close, but it didn't pin. And I don't know if it's going to pin this week, but I still think it's going to be right around that 2100 area at the end of the week.
You think they keep trying to pin just to make sure everybody gets screwed? The puts in the calls, or is that what's going on?
Well,
I think so.
Yeah.
Crazy. But
anyway,
go back and look at the other monthly expirations. It's been this amazing how the open interest fight goes on, and they tend to get it right where the big amounts of open interest are for the calls and the puts.
Exactly.
On the SPY or SPX.
Yep.
It's kind of like the thermos that keeps the hot things hot, the cold things cold. How do it know?
Yeah.
So somebody knows what they're doing there. Okay, let's go back to Christian. And the question is, what do you think are the main reasons why most traders are not successfully consistent, and what could the average trader do to improve consistency?
Sure, and I'm going to answer this question. I was one of the panelists a few months ago, and I don't think my answer is going to change too much. It's to have a game plan. So some of these things are pretty simple, but when you go into to purchase a stock or purchase an option, whether you're watching flow or you're swing trading, you have to have a couple reasons why you're entering a stock. What's the catalyst that's going to move it higher? What's the catalyst that's going to move it lower? If those catalysts remain while you're in the trade, great. You want to have discipline. Once those things go away, if you're looking at various different technical levels, if they breach on a long, you want to have a game plan. When do I get out of my position? When do I want to start? When do I want to hit targets? I was in a trade earlier in Netflix, right off the open, and I said to the traders in my room, this is where I expect Netflix to get up to. There's going to be resistance at this particular level on the 1 hour chart. Bam, we hit it, and I got out of my trade at that point. So having that game plan going into the trade, being ready, and not kind of putting a game plan in place once you're already in the trade. It's too late at that point. And that just goes on to further, having discipline. If the trade is not working, I see a lot of traders make mistakes where it goes against them, and now they're in the hope situation. So having that discipline, I don't use hard stops, but I will use, I do have certain alerts that go off. If it's starting to break down, get out of the stock. It's not, that having that discipline, and it's tough for traders to admit that they're wrong, but, it is what it is in trading. Nobody's going to be 100%. It's like batting average, right? I mean, no hitter bats 1,000. So, being comfortable with admitting that you're wrong sometimes is better than getting yourself into a situation that you keep adding to a position and creating an issue, because that also takes away from your other trading. As you're managing that position and it becomes more of an overhang, you're missing out on new opportunities. And then finally, the last thing I'll say is patience. One of the biggest things as well for traders is not letting their winners run. I encounter this problem a lot of times as well. You get a nice winner, and you're like, wow, you want to take that money. So having some mechanical targets where you can you're specifying, where am I going to take some money off the table, and where am I going to let my last piece of the trade ride, and let that winner ride. So it's a combination of things. A lot of those are psychological, but I think in setting up in the beginning is having that surefire game plan.
Amen. And then you touched upon a lot of things that I want to bring up too, but perfect. Good answer on that. Larry, let's go to you. Same question.
Yeah, he stole my thunder. I mean, so it really comes down, because everybody here probably is going to say something very similar, but when you've been at it for a long time, like everybody here has been, so it really comes down to always having a plan of action. But trading is a business of probability, so again, you're not going to bat 1,000, so you have to have a plan going in. So every trade you take, you better, whatever your methodology is for that trade, why do you take the trade? Stick to your rules. Okay, have a rule-based kind of plan. You get into the trade, then where is your profit points going to be? You have to know that going in before you put the trade on. Also know what are your exit rules going to be if it goes against you. What is your defense going to be if it goes against you before you put the trade on? So if you identify those kind of factors going in, stay to your plan to minimize your potential losses, and that's going to really help you to be more consistent, because again, a lot of traders do freeze up and get that wish that the trading gods will bail them out, which usually never happens. So the key to it is the risk management, and one thing that's really helped me as far as my trading is using options. And when a market stalls whatever you're trading, then I always like to have a plan where I usually sell some kind of option against it, and to do that to take advantage of theta decay, time decay, because a lot of times you'll see a really good trend, and you can see it on Amazon or any of these really high beta stocks. They'll have a really good burst, and then they'll take a pause to collect energy. So you might get into that trade, and it takes that pause, and you're thinking, oh no, and you follow your plan, you get out and get stopped out, but then it goes right back up. So what I tend to like to do is have a plan where if a trade starts to go against me, the first thing I'll usually do is sell some options against it, either outright naked or credit spreads, and then evaluate it. It gives me time to pull back and see how that trend might shift. So again, it all comes down to your risk management plan.
Cool. Yeah, a lot of moving parts with options, but if you know what you're doing, then absolutely. It makes a lot of sense, but I do like a lot of things you just said, and I'm going to touch upon what everybody said so far, but I'm sure Ed will give you a few more things to talk about. So, Ed, same question to you.
No, I really don't have anything to add. I mean, I think everybody has spelled it out in quite good detail, and I'm not going to hear myself talk. I'm just going to say ditto, and we'll move on. Yeah.
Well, I'm going to talk to hear myself talk, but and repeat what everyone said. First of all, when you look at trading, it's like everybody's a setup junkie going in, and then you discover that you're going to need some money management. Then you finally realize that the game is often in your own mind. So there's mind, money management, methodology. I like to see them as a three-corded rope. One cannot exist without the other. Money management, and again, as I mentioned a second ago, if you look on the homepage of my website today, I've got a long article on that. But money management will cure a multitude of sins. So if you're trading at the right size, then each trade shouldn't get you too excited or get you too depressed if it goes for or against you. Somebody pointed out, I believe it might have been Christian, something about not letting profits ride. A lot of times people tend to monetize a trade. You finally get a good trade and you're like, oh, well, I better take profits. And in this market, in this business, you must make as much money as possible. As somebody said earlier, you have to plan the trade, then trade the plan. And you must plan while things are static. And most people wing it. And the reason most people wing it is because nobody wants to admit that they could be wrong. And then we're just not made to trade as human beings. If you were an engineer and half of your bridges or even one of your bridges fell down, you wouldn't be an engineer for very long. If you killed half your patients as a doctor, you wouldn't be a surgeon or a doctor very long. But in trading, you could be wrong quite a bit and still do quite well. And the other thing, too, we all talk about money management being vitally important. Back in my computer science days, we had a saying, garbage in, garbage out. So if you're picking the best markets to begin with, you're more likely to stay with your winning trade and realize when you have a bad trade and get out of it. And again, all three are intertwined. And so if you get your money management right, you're not so worried about each individual trade. If you get your methodology right, then you're more inclined to get rid of something that's not working because you know it's taking up space and you can maybe find something that is working. So again, I can talk all day on these three things, but if you're newer to trading, trade at a very, very small size to where it's almost insignificant, and then make sure you study that methodology at good conditions, at bad conditions, and mediocre conditions. I have people come along at good times, they print money, and then they go off and do stupid things because they think that the market will always be like that. It's a permanent income hypothesis. I see people that come along in mediocre times and they make a little, lose a little, and then they give up and chase rainbows for 10 years, and they stay perpetually out of phase. So find something really simple, stick with it, trade the small size until you become successful. If you're not successful doing one thing, you're not going to be successful doing 10 things. So get successful at one thing. And if you're not making money trading at a very small size, you're not going to automatically make money if you trade at a big size. So just take your time and ease into things. And that's my long-winded answer of repeating, I think, what everybody just said. So thanks for listening, or pretending to listen at least. Okay, let's go back to you, Cameron. And what's your? Do you have a trade idea for this week? A free trade idea?
I was supposed to, and like I said, and we had a interesting morning here, and I wasn't able to put that together. But I would say I'm fairly confident this market's gonna, this PX is gonna be up there around the 2100 area. So I'd just say cautiously do either a put credit spread or a call debit spread. I mean, take advantage of what might happen this week. I wouldn't go hog wild on size because well, always anything can happen. But I'm got that 70% confidence level we're going to move up a little bit. But no, I didn't put anything together to show on the screen, and I apologize. Next time.
No worries. Christian, let's go over to you. You have a trade idea for this week?
Yeah, let me just share my screen again. I'll show you a couple things. Yeah, I've got a little bit of a double answer for this one. So for a long idea, we've seen the agricultures, all the agriculture commodities absolutely on fire. Soybeans, cotton, corn, over the last month, they've really been in favor. We caught a couple of those moves in the futures, but I think some of those are getting a little bit overbought in the futures. Soybeans definitely. Where I'm looking at is the MOO ETF. It's a little bit of a safer way to play the group. What's in the MOO ETF? It's Monsanto, it's Zoetis, it's Deere, Tyson, Potash, Mosaic, which a couple of those names, CF Industries as well. Those three names we've been seeing some call buying the last couple weeks. I like the chart in MOO, the daily chart. It's coming off the highs, but I think it's in a nice uptrend, and you're catching it, right about the top of value. So, I think now could be a nice play in the MOO ETF to the long side. And then if you're looking for a Brexit a Brexit trade, worried about a little bit risk going into next week. We did see a very large put spread go up last week in FXE. That's the Euro ETF. It was the 108, 106 put spread that was bought for 50,000 times. Paper paid about 42 cents for that. So size purchase of, going bearish on the euro. So it's a short dated position. It's July. It'll cover the Brexit. It's a little bit of a cute trade. I think if the Brexit does happen, everything's going to go down. But I think this is a little bit of a different way that you can play that event.
Cool. What's the vote date on this Brexit?
23rd.
23rd. Yeah.
23rd. I got to make a note of that.
Next Thursday.
Note to self: don't put any forex positions on the 23rd. All right, Larry, let's go to you. You have a trade idea for this week?
Yeah, based off what I was talking about earlier, the kind of the open interest kind of accumulating right there about the 210 strike for the SPY or the SPX, you could look to do some butterflies around that particular strike to take advantage of potential getting a pin close to it and taking advantage of the theta decay coming into the expiration. So you could do something with a 2100 as the body, and then a balance fly around that. Either $1, $2 wide. Just depends on how much risk you want to take. And the other trade idea I like a lot is doing an unbalanced butterfly, where you're kind of skewing the risk to the upside. So something like where you're it's a ratio butterfly. You're long a call spread, and then you're short 2-to-1 bear call credit spread against it, something like you can see here. So this kind of trade setup I like a lot. We did this last week where we got a 60-cent credit on the SPY. So if it goes down, you make $60. If it pins at 210, you make close to 150. It goes up, your minimum risk is the difference of about 40. So it's a really good kind of risk reward skewed to the downside, which I still am kind of a little bit more skewed as far as bearish, kind of a pullback. So that's a trade setup I like.
Cool. All right, Ed, do you have a trade idea for us this week?
Well, I do, a little different. Sometimes the best thing we can do is sit on our hands and do nothing. And that's how I'm feeling right now. As I said before, I think we're going to get a rally this week in higher, but I think it's a bull trap. I like Cameron's reminder that markets do typically drift higher into option expiration. I think that's a good point. I also think that the question about Brexit next week is another good point that could tend to pull the markets down. And frankly, this morning or today's action in the Euro Stoxx 50 confirms that, as the triangle that's formed in 2016 was triggered, and that measures a minimum decline to 2490 on that index. So I'd say it's all we're set to go down next week. Whether it'll stop on Thursday or not, I don't know. But just for me, the trade is to do nothing this week.
Well, thanks again, Ed. You stole my thunder. I'm going to tell you people to do what I told my people, absolutely nothing. And if you back this Russell 2000 all the way back out to 2013, you can see that on a net basis it hasn't gone anywhere. And it also looks like an electrocardiogram. And I tell people, if you look at a chart and you can hear like beep, beep, beep in the back of your head, it's probably not an index or something or a market that you want to be trading. And in this particular case, because this is a small cap index, you want to be very cautious. And again, like I said earlier, garbage in, garbage out. This doesn't mean that we haven't been buying stocks, but we've been very careful. And many days like today, I'm telling everyone, hey, let's not do anything. So I think it was Jimmy Rogers who said he waits until there's money lying in the corner, and all he has to do is walk over and pick it up. In the meantime, I do nothing. And I think that kind of dovetails back to the question of the week, and it's like, what's one of the secrets of trading? And one of the secrets of trading is sometimes you don't do anything, and we're just not necessarily made to trade. As I said earlier, if half your bridges fell down or you killed half your patients, you wouldn't have a job very long. But in trading, sometimes you're not supposed to do anything or take any action. I guess it didn't make sense. Sometimes in trading, I'm sorry, at a regular job, you don't get paid for not doing anything, but sometimes in trading, you lose money by taking action. I think now is one of those times to be very cautious. Okay, let's go ahead and get some closing thoughts from you guys. Cameron, let's go back to you. Any closing thoughts or anything else you want to tell us about your website, TradingWorks?
No, I really don't. Like I say, it's TradingWorks.info. I'm Cameron at TradingWorks.info. I'd love to chat with anybody in the retail side that is just trying to get started. You know, other than that, I'm just happy to be here. Always great to be with the experts, you know, and
love having you.
Gather ideas. But be nimble this week. I think you guys that are staying on the sidelines, I certainly feel that way. If I do, I mean, any sizing I'm doing this week is very small.
Okay, cool. All right, Christian, same question to you. Any closing thoughts? Anything else you want to tell us about TribecaTradeGroup.com?
Yeah, sure, absolutely. And you know, just to echo your comments, you know, cash is a position, and you know, we talked about a couple technicals, and you know, to say that, you know, right now we're just kind of waiting and see. You know, I think we are in this position where, you know, we've paused on the up leg, you know, and I think until we get above that level that I talked about, 2117, I'm in the kind of into the prove it camp. You know, I do think from, you know, just coming from my thoughts, I think eventually we get to higher footing, but I'm going to let the market prove it to me, and I don't mind missing a little bit of a few points for some confirmation. So that confirmation for me is in the S&P, and that's 2117. We get to that level, and it's a little bit of an all clear for me once, you know, we close above that level. So that's what I'm looking at, and but I think so with all these events for the next week, I think it's a good idea to be a little bit conservative. You know, it's not often where we have 3 or 4 different, you know, we've got 2 central bank meetings this week, we've got a vote next week, and we've got quadruple witching. If any of those could be a reason to kind of sit a little bit and be conservative, but I think altogether, certainly, you know, valid reasons. Yeah, over at Tribeca Trade Group, we actually have an open house this week. You can check out our trading room for free all week long. See if you like it. There's no cost to you. My website's TribecaTradeGroup.com, and my Twitter handle's @CFromhertz, where you can find the registration. So thanks very much for having me, and this is the second time I've been on the panel, and it's really great. I learned something as a presenter every time I've done it, so it's really great. Thank you.
Yeah, no, I enjoy it. This is why I come back whenever David asks me, because I learned something too. I did like what you said. You reminded me of something. If this is the mother of all bull trends, which I've been telling everyone, then take a bit of a show-me approach. We're not that far away from old highs in the S&P, so prove it to me. As a trend follower, I'd like to see the market go to new highs and stay there before getting too excited. Let's go to you next, Larry. Any closing thoughts or anything else you want to tell us about PowerCycleTrading.com?
Yeah, just check us out, PowerCycleTrading.com, and just like to echo what has already been said. You know, this week you do have Central Bank of Japan, the FOMC, which we don't think much will happen, but the Japan situation could be interesting. That could really get the markets rattled, and then we do have that vote next week. So with all the uncertainty, I don't see the market taking off to the upside, and we could actually, you know, we could get a little bit more of a pullback. Who knows? But you know, to be you know, not too overly aggressive and too extended on any types of trades. Keep your liquidity small. And if there was one area that, you know, I'd look at maybe to be more aggressive, if an opportunity came, it would be just on kind of spreads based on some energy spreads. You know, gas cracks. We saw something on inventories Wednesday that looked good. We had a huge draw on gasoline and build on crude. I would jump all over gas cracks, and that's about it.
Oh, okay. Cool. My name's Dave Landry, obviously, Dave@DaveLandry.com. I do answer all my own email, so feel free to shoot me an email if you have any questions. I have a ton of content on my website. I have over 500 posts. I have half a dozen free reports, so check those out. They're under the store. Also, I have over 1,600 YouTubes, and I do a weekly webinar. It's a live webinar where you could participate in that, so see my website for that. Love to have you there. If you got any questions on trading, feel free to join us. We don't take ourselves too seriously, so feel free to show up. I think that pretty much wraps it up. David, let me let you close up the show today, but obviously I want to thank you guys for showing up, and it was nice to meet you new guys, well, new to me at least, Larry and Christian. I enjoyed learning from you guys today. So thanks for showing up.
Hey, Dave.
Did I miss something? Ed, did you get to see closing comments?
Dave's
Did I
mad
forget
at
about
me.
Ed again?
Dave's
I've done
mad.
that before. For some reason, Ed, I look him over. I'll look over him. I'm sorry, Ed. Go ahead.
It's easy to do. Well, I'll tell you what. I'll take the hint and keep it short. SeattleTechnicalAdvisors.com. Please feel free to come by. You want to find out about George Lindsay? There's a page there anyone can access. Find out what's this Lindsay stuff all about. Again, love to see anybody want to take a trial subscription or a sneak peek. You're welcome to do that. And my last thought of the day is Microsoft's acquisition today of LinkedIn at a 50% premium. Is that the bell ringing at the top? Yeah, or is this just their next Nokia? And with that, peace out.
Hey, sorry about that, Ed. I've done this
No
to
problem.
you before for some particular. I don't know why, but I guess for whatever reason. But yeah, my apologies on that, and it won't ever happen again. I promise. All right, David, back to you.
Okay. Okay. Thanks, guys. Great show. Just want to remind everyone watching that if you haven't had a chance to take a look at this report yet, it's on TimingResearch.com. Also, the archive for this show and all the past shows are there as well. Hope everyone enjoyed the new free trade idea section, and we're going to add that as a permanent part of the show from now on. So next week we're going to have Andrew Keene, Roy Swanson, Sean McKisson, Jason Jankowski, and Matt Buckley. So be sure to join us for that. And just want to thank all my guests for this week again. Cameron Yost of TradingWorks.info, Christian Fromhertz of Tribeca Trade Group, Larry Gaines of PowerCycleTrading.com, Ed Carlson of SeattleTechnicalAdvisors.com, and of course Dave Landry of DaveLandry.com. Thanks, guys.
Thank you.
Thank you, Dave.
Thank you. Bye-bye.
Thanks.